Welcome back to the Introduction to Social Security Disability Benefit Programs and Work Incentives Training. This is lesson 4 out of the series of 6 lessons. And this lesson, we're going to focus on understanding the SSI program. Now, we have to set up a lot of base understanding before we can move into the effect of work on SSI. And that's because this is a complex program, and there are lots of things that can affect an SSI cash payment that have nothing to do with working. So we're going to start with those basics first, and then we're going to move into the next lesson, lesson 5. We'll cover the impact of paid employment on the benefits. So what are we hoping to get out of this particular lesson? To begin with, want to make sure that everybody participating can understand the overall purpose of the SSI program as a financial needs-based income support program. And remember, that's really different from the Title II disability benefits that are insurance. That's an insurance program. This is an income support program. And the financial needs-based issues, the means testing, adds a lot of complication. And we're going to spend most of the lesson today, this 1 hour, covering those basics. Secondly, we're hoping that participants will be able to identify the factors that affect eligibility for SSI, and beyond that, what can make that benefit payment change. And there are lots of factors that are brought into play when we're talking about eligibility and payment amount. Third, we hope that you'll be able to describe the effects of resources on SSI eligibility. That's an issue we never have to deal with in the Title II program because resources are not relevant in that program. It's only in the SSI program that resources have a bearing on eligibility. And we're hoping that you'll be able to identify some of the most common resource exclusions. Now, there are a whole lot of exclusions to both income and resources, and it's one of the most complex areas of SSI law. But for this lesson, we want you to just understand some of the most common ones. And finally, we hope that we'll give you a pretty good understanding of the redetermination process and the 12-month suspension provisions, because that is something that is very important in this program, and we want to make sure that you're clear on how all that works. So without any further ado, let's get going. Let's take a few minutes to do some reminders about the SSI program. Remember, we've had the door shut on SSI for the last lesson, in which we really went over the Title II rules with regard to working. So we want you to open that door again. We're going to talk about the SSI program and close off the Title II stuff that we focused on in the last lesson. So what do you need to know about SSI? Remember, it is a needs-based program. It has very strict income and resource guidelines that have to be met for eligibility and that also can affect the payment amount. Remember that SSI is the payer of last resort. So if a beneficiary can establish entitlement for one of the Title II programs, those benefits have to be applied for and accepted first, and then SSI fills in as is required and as the individual can meet eligibility for all of the SSI rules. Now, the benefits in the SSI program, that monthly check, that doesn't come out of the trust fund. Remember, the Social Security Trust Fund funds the Title II benefits. SSI is not paid for out of the trust funds, paid for out of general tax dollars. And remember that in most states, not all, but most states, if you can establish eligibility for SSI, typically you are found eligible for Medicaid as well. There are some exceptions. In certain states, you have to meet some additional eligibility requirements to get the Medicaid on top of the SSI cash payment. So let's remember a few additional things. SSI was really intended to augment or supplement any income that an individual already had. And the whole purpose of the SSI program was to provide a very subsistence level of support for the basic costs of food, and shelter. Okay, that's really what this is for, those very basic and essential costs. And the maximum federal payment in SSI is established every year. There's new figures that come out, and they take place every January 1st. Typically, it's an increase, or at least not a decrease from the year prior, and that figure, that amount, is referred to as the federal benefit rate, or the FBR. Now, on this slide, you'll see an important distinction. There is a separate benefit rate for an individual and another benefit rate for something referred to in the SSI program as an eligible couple. And that's when two SSI recipients are married to one another. And we'll talk a little bit about eligible couples later. Now, eligibility and payment amount in the SSI program are literally established on a month-by-month basis. Now, that doesn't mean that Social Security contacts every SSI recipient every month and says, okay, how much did you have in the bank? How much income did you receive? What was your living arrangement? That would be unmanageable. They have a redetermination process that occurs periodically. It's about every calendar year, but doesn't have to be. And at the redetermination, they're checking all of those eligibility criteria, and they're checking to see if they accounted for all of the income the individual has, and they will retroactively adjust the SSI cash payment if more was paid than should have been. So it is done on a month-by-month basis, but they're not checking on beneficiaries every single month. And finally, that bullet there about redeterminations or reviews, those are conducted periodically. There's a scheduled redeterminations and unscheduled ones. The big difference is the scheduled ones are marked down, and at a regularly scheduled time there will be a review conducted by Social Security, and the unscheduled ones are reviews that are prompted by news, by something that comes up. And it prompts Social Security to initiate a review on someone because information was received. Okay, that's real common. So what are the factors, again, that affect your monthly amount in your check, how much you get every month? And these 5 factors all work together. Sometimes it's just one factor at play. Sometimes it's all 5. I mean, you just never know. Income, that can be earned or unearned. And in the SSI program, they make a big distinction between earned income and unearned income. They treat those two types of income very differently. This is very new because remember, in the Title II program, most forms of unearned income don't have any bearing on your check at all. But in the SSI program, it can. Another issue that can affect how much you're paid in the SSI program is your living arrangement. And we'll explain that in a minute, but a lot of it has to do with how many people you live with, who's helping to pay the bills, are you paying your fair share for food and shelter? Because SSI is intended to pay for the basic cost of food and shelter. Obviously, if somebody else is helping you with those costs, there can be an effect on your check. Marital status. That's another factor that Social Security has to consider, and your marital status can affect your eligibility for SSI as well as your payment amount, and we'll cover that a little bit later on. Finally, there's a concept that Social Security refers to as deeming, and we'll cover that a little bit in this lesson. It's a very complex concept, and it's basically when someone else has income that Social Security attributes to you, the SSI recipient, because you're in a situation where it's assumed that people share their income and resources. You can imagine that would happen if you're married, that would happen if you're a child living with your parents, things like that. We'll cover it very briefly. And then finally, we talked about this very briefly, is overpayment recovery. In the SSI program, it's possible that if you forgot to tell Social Security that you had some income that came in, maybe you received more in a cash payment than you should have, and when Social Security conducts their review, they would find that income and say, oh, you owe us a little bit of money, and there are a variety of ways that they will recover that money that you now owe them. But one of the ways is by reducing your subsequent monthly payment. It doesn't have to be done that way, but it is an option that Social Security has. And in some cases, you will see people whose monthly payment is being reduced because of overpayment recovery. And again, remember, all of these can be at play, or none of them, or any combination. So it can get pretty complicated to try to figure out what's causing an individual's check to be the exact amount that it is. So let's take a look at income in the SSI program and give you just a very brief overview of how Social Security looks at income and the effect that income has on the SSI cash payment. Income is anything that an individual receives in cash or in kind that can be used to meet the basic needs of food and shelter. That's a very broad definition, but it's very clear. So it doesn't just have to be cash. Remember that there might be a job that a person has where they're provided with food and shelter as part of their compensation package. That, if it's part of a job, would be considered or earned income, and it would be the value of that housing and food that's provided. So that's the in-kind aspect to things. It doesn't just have to be cash. So anything that an individual receives in cash or in kind that can be used to meet those basic needs could potentially count. Now, the income also includes the receipt of any item, like a thing, that could be applied either directly or indirectly by sale or conversion to meet the basic needs of food and shelter. So if you were given a item, something of value that you could sell, and there was value attached to that item, that could also count as income in the month that it's received. You see, it's a very broad definition. The in-kind income, as we discussed, isn't cash, it's things, or someone actually providing you with food and shelter. And the SSI program classifies income as either earned or unearned. And it's so important that we get clear when an income is received which category it goes in, because Social Security treats those two kinds of income very differently in the SSI program. So those distinctions matter. So what is not income? Well, some items that an individual receives would not count as income because either they don't meet the definition of income that Social Security has prescribed, like an item that is not food or shelter and which cannot be used to obtain food or shelter would not be income. Now, other items might be income by definition, but they're specifically excluded from an individual's income by federal statute. And the rules within the policy manual that Social Security uses, it's called the POMS, P-O-M-S, and there are page after page after page, citation after citation of all of these descriptions of things that are excluded. That list is long. So we're going to hit some of the basics here, but there's a lot more that could be excluded than we'll cover in this 1-hour lesson. Things like payment of an individual's bills, with the exception of food and shelter. So if I'm an SSI recipient, my mom paid my cell phone bill, that's not income. Okay, that's okay, as long as she's not giving me the cash to pay my cell phone bill. If my mom is paying that directly, then that could be excluded. Things like food stamps and HUD housing assistance and energy assistance, things that are means-tested programs in and of themselves, typically those kinds of things are excluded. So while I might be getting SNAP or food stamps, the value of my SNAP benefit is not going to decrease my SSI or affect it in any way whatsoever. Certain types of educational assistance, if I get grants or loans, things like that, not all of them, and it depends on how you spend the money, but there are certain types of educational assistance that are excluded. And things like tax refunds. Tax refunds are excluded for a really important reason. When you get earned income, the SSI program counts your gross income. That's before taxes are taken out, not after. So if you get a tax refund at the end of the year when you file your taxes, that income that you're receiving as a refund, that's already been counted against you. So that actually, there's a common sense reason for that. Now remember, this is a list of tiny little lists. There are many, many, many more things that would be excluded by statute. We just can't cover them all in this course. So let's talk a little bit about the differences between earned and unearned income because they're significant. So earned income is any gross wages or earnings from employment or self-employment. So really anything that you receive in exchange for work performed could potentially be counted as earned income. It could be in-kind items like room and board, net earnings from self-employment. So if you own a small business or you're otherwise engaged in self-employment, there are some deductions that they allow in the self-employment program before they count it, but it's gross wages when you're in wage employment. Payments from services performed in a sheltered workshop or a work activity center. We specifically include this on this slide because there is a common misconception that if someone with a disability works in a work activity center or a sheltered workshop, that somehow those wages that that person receives are not counted. They are. If you have any questions about that, we would probably want to refer you to a local WIPA program, but that's a common misconception. It's important that you understand that those are reportable and would cause a reduction in the SSI cash payment. And then things like royalties earned by an individual in connection with like publication of his or her work or honoraria. There are many, many, many citations within the POMS that specify all the different kinds of earned income and exactly how they're counted. We don't expect you to be experts in all of that, and CWICs aren't even expected to be experts in all of that. There will always be times that a beneficiary has to be referred to the local field office for a determination as to, is this income at all? And if it is income, is it earned or is it unearned? It sounds like that would be easy to figure out, but it isn't always. So on the unearned income side, the way the POMS reads is interesting. Is it's basically unearned income is any income you receive that meets that definition of income that's not earned. Again, it can be cash or it can be in kind. And if it's not earned income, but it meets that definition, then it is definitely unearned. It can include the common things would be a Social Security Title II benefit like SSDI or CDB, workers' compensation, unemployment compensation, anything like that that is cash or in kind that a beneficiary receives, but that is not remuneration for work performed or compensation for work performed. It can be things like annuities and pensions, alimony, if you even use that word anymore, and child support payments, dividends, interest, rental income, anything like that. So it's a very broad category. And again, there are always questions when beneficiaries receive something and they want to know, well, how is this going to count? And these kinds of determinations can get really complicated, and only Social Security personnel can make these determinations. So how does income affect the SSI cash payments? Lucy, you've said it causes a reduction, but how does that work? Well, gross unearned and earned income are evaluated separately, and they're treated very differently. To each type of income, the first step is deciding how much gross earned and gross unearned, and we keep that separate. Then there are certain deductions that are applied. Some only apply to earned income. Some only apply to unearned. Those are deducted. Countable unearned income, that's what we call unearned income after all allowable deductions are taken, is then added to the countable earned income. Again, that's what Social Security calls the amount of income after deductions have been taken. They add those together, and then they subtract the total countable income that a beneficiary has from that individual's base SSI rate to determine how much cash payment is payable, if any. If it's a lot of countable income, it could result in no cash payment being due to an individual. It's just something to think about. So more about SSI and income. One of the things that's confusing to people is that Social Security, because adjusting SSI cash payments takes effort, all right? There's stuff that has to be done to adjust a cash payment. It takes time. So one of the things that confuses people is that the check that you receive in the SSI program today, if it's the first of the month, typically is based on however much countable income you had 2 months earlier. That isn't always the case, but in most instances, that is true. This process where the payment today reflects past earnings from past month is called retrospective monthly accounting, wow, or RMA, and it is a very complex subject. We bring it up because we want to make sure that you understand and that beneficiaries understand that often when they go to work, they report their wages to Social Security and they're looking for that check to change the very next month, and it often doesn't. And so it sort of confuses the beneficiary, and it's something we wanted to prepare you for, and it's something that the WIPA programs discuss with beneficiaries is when they can expect that SSI cash payment to be adjusted, and it's about 2 months later. Again, complex area called retrospective monthly accounting. Now, remember, in your readings, there's a lot of information in there about the SSI program that we gave you basic readings that we wanted you to look at before this lecture, and there's a whole host of in-depth readings that are in the additional resources section that you can read if you have an interest in a particular subject. We certainly do have a resource paper or document on retrospective monthly accounting if you have a burning desire to know more about that topic. Now, marriage does affect the SSI benefits. It can affect an individual's eligibility. It can also affect their cash payment amount. And this is to be expected because it is an income support program and it is means tested. And when individuals are married and living together, Social Security considers the assets or resources and some income of that spouse when they're determining the eligibility for the SSI recipient. And that is to be expected. Social Security considers 2 SSI recipients who are married to each other as a special kind of situation, and that is called an eligible couple. Now, something to understand about eligible couples is that their federal benefit rate, remember that's the maximum amount that you can receive in a given month of federal SSI, there's a different FBR for a couple than there is for an individual. And although we don't provide those figures in this lecture, that is provided as part of your handout. So you want to make sure that you go and look at the current FBR so that you know what that is. When an SSI recipient is married to an ineligible person, someone who doesn't get SSI, Social Security will examine that person's earned income, unearned income, and their resources, and will apply some of those resources and income to the SSI recipient through a very complex process known as deeming. And I know that word sounds unusual, but here's what it means. It means that Social Security has an expectation that when people are married to one another, that they share their income and resources. And so there's a complex process that Social Security uses to deem, right, or determine a portion of that ineligible spouse's income or resources to be available to the SSI receiving spouse, right? That makes sense. You would expect that. Social Security's definition of marriage is complicated, and this is Social Security's bread and butter, is family relationships. And although it sounds like it would be something very easy to understand, very simple, it is not. Familial relationships is a whole complex area of Social Security law, And when someone is considered married, it can be a lot more complicated than it seems at first glance. So whenever there's an issue there, that is something that needs to be referred to Social Security for a formal determination. The thing to remember is that a marital status, whether you're first getting married or whether a marriage is dissolving, both of those kinds of situations can affect not only the monthly benefit payment for an SSI receiving individual, but also eligibility. And if eligibility for the program is lost, typically the SSI-related Medicaid stops as well. So that's a very important thing to understand. Deeming. Deeming is probably one of the most misunderstood areas in the SSI regulations. And the reason for that is simple. It's really complicated. The notion of deeming makes sense. It's very intuitive, and that is that in certain situations, family groupings, children living with parents, spouses residing together, there's an expectation that those family members share income and resources. And so some portion of an ineligible individual's income or resources is then deemed or determined applicable or available to the beneficiary. And so some of that counts in deciding if the individual is eligible for SSI, and if eligible, how much to provide the person in cash payment. And the three situations for deeming are listed here on this slide. Parents of children, and remember, children in the SSI program means someone under the age of 18. As soon as you turn 18, you're no longer considered a child in the land of SSI. Spouses, right? Individuals who are married either to SSI recipients as an eligible couple, and deeming applies to an SSI recipient married to an ineligible spouse. All right, so that's a distinction there. And then sponsors of aliens, folks that are in this country being sponsored from somewhere else. Now, the portion of income or resources that are shared with the SSI eligible individual is deemed as being available to that person, thus it counts. The process by which Social Security decides how much of that ineligible individual's income or resources to deem is complicated. Now, we have provided you with some briefing papers, there are several, on the subject of deeming. There's a paper that discusses deeming in general. That's probably the best one to read if you want to dig into this subject more. There's a lengthier paper on spouse-to-spouse deeming, where an eligible individual is married to an ineligible individual, and deeming is occurring there. And finally, the most complex is parent-to-child deeming. These resource documents are available to you if you have a need to dig a little bit further. But I warn you, this is complex stuff, and they're probably, if there's questions from a beneficiary, your best bet is to typically refer the person to Social Security for a determination. Let's see, they apply at initial application and forever onwards, as long as you're receiving SSI or eligible for SSI, and as long as you're in a situation in which deeming would apply. Married, right, or a child living with parents, or sponsor of aliens. Another thing that affects SSI that people don't think about is living arrangement. So you think about the way the SSI program works. If SSI is intended to provide a base level of support for food and shelter, if you are living in a situation where you are being provided with assistance with food and shelter, then your living arrangement would matter, right? It could possibly affect your eligibility for SSI, certainly could affect your payment amount, your monthly payment amount. And the way that Social Security reduces your SSI based on living arrangement is through another really complex area of Social Security regulation referred to as in-kind support and maintenance, or ISM, ISM. Now, ISM, in-kind support and maintenance, really is a concept that is applicable primarily to adult SSI beneficiaries. Remember, when you're under 18 and you may be living with your parents, it isn't ism that would apply to you, it would be deeming, right? Very different concepts and very different calculations. Social Security examines the beneficiary's living situation to make ism determinations. And it gets really complicated. There are a number of standard living arrangements, and based on the description that the beneficiary provides to Social Security, they will determine which of those living arrangements you are in. And based on that, there is specific instruction provided to the Social Security employees about how to value the in-kind support and maintenance, which then determines how much of your SSI check is reduced or how much it will be. And the last bullet, it seems rather commonsensical. These are just really complex. Again, we've provided you with some resources on in-kind support and maintenance. If there are questions that beneficiaries have about, I moved in with my mom and my SSI check went down, what happened? Again, these determinations are best resolved at the local field office. So it's very clear at this point that depending on a person's situation, which can change month to month to month, if someone had a significant change, they got married, they moved back home with mom, they received unearned income of some sort, they got some resources, all of these things are reportable events, meaning they could affect your check, so you have to notify Social Security. Well, unfortunately, beneficiaries don't always remember, or maybe they didn't know what they had to tell Social Security. And so it gets to that redetermination time, and Social Security notices, oh, you had this income, or you got married in this month, and we provided you with a check that was X amount, but it should have been this other amount. It happens all the time. And when that happens, you were paid more than you should have gotten, and so you now owe Social Security that money back. And basically, Social Security has a couple of different options of recovering that overpayment. Their preference always is to ask the beneficiary if it's possible for him or her to pay the entire overpayment back. And in the SSI program, that's pretty rare that a person can afford to do that because it's a means-tested program and folks don't have a lot of resources. So that's not often possible, but Social Security will pursue that avenue first. They'll check. And if that isn't possible or it isn't reasonable, then what Social Security can do is deduct some of future payments based on some very specific rules about how much they're allowed to take out of your SSI cash payment over a period of time to recover. That's what they call that overpayment. Now, conversely, even though it doesn't really discuss this on this slide, SSI recipients can also be underpaid. So let's say that you had a job and your SSI check was being reduced because of that earned income, and you quit your job or that job ended and you forgot to tell Social Security. Well, then they could be reducing your SSI cash payment because they didn't know your employment had ended. So in that situation, when you notify Social Security, there's, oh my goodness, we underpaid you. And then Social Security will compensate the individual for that balance due. And typically it comes in one payment, but there's a variety of ways that can occur. So that's overpayment. Now let's switch to resources. People get confused about what is the difference between income and resources. And there's a wonderful expression that I think really clarifies it all, and it's very simple. Income is something you get. Resources are something you've got. It's all about timing, okay? So let's say that I get earnings in a month, some wages, and in the month that paycheck is paid, sent to me, I get that, that's income. If I put it in the bank or save it in some way, then as of the first day of the following month, any of that income that I've retained is now a resource. So income is something you get, like in the month you get it. Resources are something you've got. So it's a timing issue. You've saved it, you've retained it. It's now put somewhere, and that could be a countable resource. Resources can be cash, but they don't have to be. They can also be personal property, including real property, like a land or a home, or even jewelry or other things can be a countable resource. Now, in order for this resource to count toward an SSI individual, it has to meet certain requirements. It's that definition of resources. So it has to be something the SSI recipient owns. It has to be something that individual has the right, authority, or power to convert to cash if it's not already in cash. And it can't be something that's legally restricted from being used for the basic costs of food and shelter, because remember, that's what the SSI program is for. Now, there are limits on the amount of countable resources that an SSI individual and eligible couple can have. And that resource is currently $2,000 for an individual and $3,000 for a couple, okay? And that is as of the first day of each month. So let's say that I got a paycheck this month and I spent all of it on things that I needed and I didn't retain any of it as of the first day of the following month. Then none of that income that I received this month will count as a resource the next month. And it is a very, very specific day that resources are counted. And it is literally, I believe the POMs that literally state something like as the first moment of the first day of a month. It's that specific. So it's as of that first moment of the first day of a month, and that's the day that resource determinations are taken, are made. And then after that, if the resources go down, as long as those resources were at a certain level on that first day, that's what's counted that day, the first moment of the first day. It's that specific. So what are the most common resource exclusions? Well, when you look in the POMs, in the rule book that Social Security employees use, there are citation after citation after citation that list a whole host of resource exclusions. We don't need you to know all of those, but the most common ones come up quite a bit, and it's nice if you have a basic idea of what things don't count or what things are excluded. The most common question beneficiaries have is about their personal belongings. And your basic personal belongings, your pots, your pans, your sheets, your clothes, the things that you have, they are not counted. Nobody from Social Security comes to your house with the clipboard and looks at that. So household goods and personal effects are excluded. Medical devices and adaptive equipment, that's really important for a lot of people with disabilities. Those are excluded as well. Certain life insurance policies are excluded. There are some specific rules about that, so it's not a blanket exclusion, but it is possible to have life insurance policies and have them excluded. A really important resource exclusion is one home, as long as the beneficiary lives in that home, and that home can be of any value. You often hear from SSI recipients who are worried about home ownership, but as long as the beneficiary lives in the home, home ownership is allowed. It is an excluded resource. And one automobile per household is excluded, something to know about. Now, burial funds, burial spaces, all kinds of things like that can also be excluded. Again, there are some very specific rules around that, so I'm not going to say that that's a blanket exclusion. Certain types of student financial aid, federally funded individual development accounts are excluded. Not all IDAs are excluded, but some. Of current interest to a lot of people, funds set aside in what's called an ABLE account are excluded. That's something to know, although it's not listed on this slide. And certain trusts, you've probably worked with individuals that have a special needs trust. As long as the trusts are set up within some very specific parameters, the funds held in certain special needs trusts can be excluded during resource determinations as well. Now, this gets so specific. If you do want to learn more about this, we do have 2 resource documents posted for you under the additional resources. One is called SSI and Income. The other is called SSI and Resources. Now, these are documents that we developed for CWICs that go into more detail on these common resource exclusions and also discuss income and resource exclusions that we have not described for you in this session. And those papers are popular, and certainly you're welcome to share those with beneficiaries and anyone in your agency who might value that information. So a really important resource exclusion that is kind of uncommon is called Property Essential to Self-Support, or PES. And this is really kind of a work incentive. This is a resource exclusion that allows SSI recipients to exclude or have Social Security exclude resources or property that an individual needs for self-support. And this can include things that are owned by a business. So if you're working with SSI recipients who are pursuing a self-employment goal, this is a really important resource exclusion because assets or resources owned by the business are not counted during resource determinations for an SSI eligible individual or couple. So you can see this is kind of a work incentive, and it does allow individuals to own businesses that have inventory, equipment, and things like that, and not have that cause a problem with benefits. Now, SSI redeterminations are something that as soon as you're found eligible and you're moving forward in the SSI program, there are always going to be periodic redeterminations. Now, I want to make sure we're clear, this is not a medical review. Continuing disability reviews, or CDRs, that is one type of review, and that occurs on its own schedule. But in the SSI program, as you've seen, there are lots of things other than your medical condition that can affect your eligibility for SSI or your payment amount. And so because of that, Social Security does redeterminations on a regular basis to check your resources, your income, your living arrangement, your marital status, all of that stuff that can affect your eligibility or payment amount. And these are scheduled or unscheduled depending on the specific individual. They typically happen about every year, but they don't have to. It kind of depends on the person. And it's nice because it's a regularly scheduled review where Social Security just double checks to make sure, did we count everything? Did you get the right amount in your cash payment? Do you have an overpayment or an underpayment that we need to settle on? And it's just something to expect. Typically, the SSI recipient is notified of the review in writing. There's forms that have to be filled out and just information that will be requested, and the review is performed. And they're common. They happen all the time, and it's just something to be expected in the SSI program. Now, a really important policy in the SSI program that unfortunately is not well known or understood is something called the 12-month suspension period. So when an SSI recipient is found ineligible for SSI because of excess income, whether that's earned or unearned, or they're ineligible because of marital status or deemed income or resources, SSI recipients, they tend to think, oh, if I'm not eligible, I've been terminated. That isn't true in the SSI program, thank goodness. You're not terminated, you're suspended. And basically, Social Security sets a 12-month clock. And if you can reestablish entitlement or eligibility for SSI in that year, that 12-month period, and it is consecutive months, then all you have to do is notify your local field office and say, oh, you know, this issue that made me ineligible has changed, and maybe you had excess resources that have been spent down, or maybe you were married and that marriage was dissolved. You go back to Social Security and say, my situation has changed. Can I get my SSI check back again? They'll do a review, and if you meet the eligibility requirements, you come right back into cash payment status. Your Medicaid will be reinstated. You don't have to reapply. There's no big long waiting period. But it's something to make sure beneficiaries know about, because they often assume when they're found ineligible that they're done and they're never allowed to come back. And nothing could be further from the truth. Thank goodness for the 12-month suspension period. It's a powerful provision, and we want you to know about it, and we want to make sure that the beneficiaries you work with are aware as well. So if they can establish entitlement again within a year, they can go back to Social Security and be reinstated. This is just some more reiteration about the 12-month suspension period. It is consecutive months. So, if I become ineligible in January, then the clock starts and I have 12 months, consecutive months, during which I need to become eligible again in order to get the protections of the suspension period. If I go for a full 12 months without establishing eligibility again, then the termination does occur. And that's not the end of the world. If benefits are necessary again later, the individual can reapply. This idea that benefits are one time per customer, that isn't true. As long as the individual is disabled, can meet that criterion that we learned about all the way back in lesson 2, and meets the income and resource restrictions, then benefits can start again. It's just that you would have to reapply, and that can be a lengthy process. There's no limit to the number of times that a beneficiary can move into suspension status. So, and it's common. People end up in suspension status because something happens, they didn't notify Social Security, or they did and they're no longer eligible and they didn't know. And then if they can reestablish eligibility within that year, that's a wonderful provision. So there we go. Lesson 4, and that's really just the background about the SSI program. And you can see why it really warranted a separate lesson, because there are so many things about the SSI program that you need to know that are unrelated to working. The deeming, the in-kind support and maintenance, the issues surrounding marital relationships, just lots of complexity. Remember, we've provided lots of additional resources. We've just given you a little taste of these issues that can pop up in the SSI program. So remember where you can go for additional information. And the next lesson, we're going to take a really close look at what work, paid employment, does to the SSI cash benefits and SSI-related Medicaid, and it's all really good news. So that's the end of this lesson. We'll see you for lesson 5.